So in this video, I have a pretty compelling idea that I want to share with you guys. SoFi has some pretty big competitors, as we all know. Well, Lending Club has already posted their Q1 earnings results for the exact same time period that what SoFi has to report on May 10th. Now, the reason why I want to go after Lending Club is because we both have bank charters and we both have a very similar demographic and product for how we're actually going to sell to our customers. So depending on how Lending Club could do, it could actually show, sort of how these companies are operating in the interest rate environment that we're going into. And by same demographic, I mean an online lender that goes after high income, young individuals with good credit. Sound familiar? SoFi. So without further ado, let me just go in and spoil this for you, okay? Lending Club actually dominated their earnings, okay? Right now you can see they're up 12.6%. This is because the market's still very rocky. But after hours last night, it was up over 20%. So what could have actually led, Lending Club to dominate their earnings so well that people are bumping up this stock into really high double-digit gains in a single day? Well, that answer is actually pretty clear, okay? Their net revenue expectations was around $255 to $265 million. What they actually saw was $289.5 million. That's a beat by over $29.5 million in a single quarter. Now, with this, they also increased their guidances and everything like that, and we'll go through it, but let's actually break down how this revenue actually mixed out. So their net revenue quarter over quarter saw a 10% bump, but year over year, they actually saw 174% gains. Now, this huge spike in earnings year over year, but only 10% quarter over quarter, is not because they absolutely dominated this quarter. I mean, they did, but what actually happened year over year is that they got their banking charter. We should be able to start seeing this between Q1, Q2, and Q3 for SoFi as the actual, bank charter starts to kick in. We're starting to fund our loans with our own deposits, and this is going to bring down our costs very, very much. You're going to see the exact same thing in Lending Club whenever we start looking at their net income as well. It's a massive difference. Now, what I also really like about Lending Club that I think SoFi is kind of lacking on is just the clarity in the numbers. SoFi actually shows how much their member growth is, product growth, and the diversification of the different products that people are using, but they're not actually breaking down, the interest rate spreads, the margin spreads, and all these different numbers like average balances per loan, or all these things that normal lenders actually show. SoFi does not show that. Now, a lot of retailers don't seem to care, and it's why SoFi is such a big stock amongst retail traders, but institutional investors want the clarity of knowing what it is. Whether it's good or bad, they're able to take calculated risks if they truly know the numbers and they can punch them in. That being said, the loan industry between Lending Club and SoFi is probably not very different. Because of the interest rates and the sort of environment that we're going through is very, very similar, and our products are almost identical. But with that clarity, what we can actually see from Lending Club is that their net interest income accelerated in their bank loan size, the actual portfolio, by 7% quarter over quarter or 65% year over year. So people are actually being able to withdraw more or wanting more balance within their loans, which actually just helps the overall size of the loans. Now, one thing is showing just how many loans we might have, but the actual size of the loans differentiates so much. So it's very important that we actually track what the average loan size is, because that could lead to, probably the most generation of how much revenue we're actually bringing in. Now, I want to touch on their actual net income as well, because what they saw was $40.8 million in net income, which makes them a very profitable business. Now, unlike SoFi or any of these other companies that are actually, cash burning right now, Lending Club has gotten to a point where they're able to actually self-sustain and actually start to make some money. This will help a lot with any sort of dilution if they ever need to look for new capital. Now, if they're trying to aggressively grow, they can obviously still do that, but they don't need to now. SoFi, if they continue to cash burn, might still need for, new capital, even though they might not want to grow. It's simply because they need to survive. But I don't think that's for very much longer. I do actually think that's going to turn around for SoFi. It's just a matter of getting that bank charter in there and just a little bit more time for us to actually turn profitable once we get those average revenue per users, up on existing clients that we no longer have to pay to acquire. And even that, I mean, their net income was expected between $25 to $30 million. They saw $40.8 million. Like, these are huge wins for the company. Very, very excited for them, but I'm also looking for a similar win on SoFi. But you can see how they're doing it. Look at their interest rate spreads between how much they can actually get the money for versus how much they're selling it to the client, what they get to keep, okay? What they actually saw, and we're going to do the previous 5 quarters, completely year over year, okay? What we saw last year, 3.27%. Next quarter, 5.47%. Then 7%. Then 8.17%, and now this quarter, 8.52%. It continuously gets better and better every single quarter. Now, SoFi is not showing us those numbers. I'm sure it's a very similar opinion to what, Lending Club has going on, but this is very, very exciting stuff because it means we get to keep more money on all the loans that we're starting to give out. Whether that's the same for SoFi, I sure hope so. I wish they showed us these numbers, but net interest margin, same exact thing, right? 3.33%, then 5.5%. 7%, 8.25%, then 8.6%. That's just so amazing to see. We need to see this type of clarity from SoFi, all right? I don't know if any management is ever going to ever see this video, okay? But Anthony Noto, if you're out there, okay, please show us this on the reports. It's so useful, even if it's bad, right? At least then we can make some calculated decisions on what we want for this company. But still, very, very exciting to see that a competitor that runs their business very much like SoFi is also seeing very, very good results. And one last thing from Lending Club, which I actually think is very, very useful if you're a SoFi investor, okay? What they actually guided for now is a $50 million beat on their full 2022 year guidance, okay? If you remember, I told you they beat by $29.5 million. That means that they're expecting to beat multiple quarters this year. All right, that's already what they're saying. They've already increased their guidances on multiple quarters, and they think they're going to continue to beat. That's very, very exciting, even though we're going into higher interest rate lending environments. I can only hope to achieve a fraction of what Lending Club has done in this entire quarter. Okay, very, very exciting stuff. I know that there might be some issues on how much our actual member count has grown. Maybe that's because we put more of our focus into actually starting to, cross-sell on existing clients, and maybe that product growth goes through the roof. Who knows what's going to happen? Can't wait to see May 10th. Obviously, I'm going to be covering it. But if you guys haven't already, make sure you guys check out my Retire by 2030 on SoFi stock to see how I actually think that this company is going to grow over time. And if you haven't already, guys, make sure you guys like the video and subscribe down below if you want to see more financial content just like this.